Let us discuss passage number 6 of the paper. This passage here is about microfinance, which the author says that is actually an innovation in banking systems and processes. This enables lenders to lend to the poor in a sustainable way. But here, the sustainability of the lender and not the borrower is the objective. So this is what the first paragraph tells us. Apart from this, the second paragraph says that expecting a change as huge as pulling the poor out of poverty is turning a blind eye to the limitations of market-based solutions such as microfinance. So this is basically telling us that microfinance has certain limitations. These microfinance units are doing business at the bottom of the pyramid, and fast-moving consumer goods cannot and will not focus on substantially changing the hygienic condition of the poor, because that is beyond the scope of its business. And similarly, microfinance institutions cannot necessarily create enabling conditions for growth, for removal of poverty, because that is not their business. Furthermore, the passage says that MFIs are just commercial lenders. Financial institutions are not expected to bring about a complete development, and therefore they should not be judged on those criteria. They can fairly be assessed in their performance as lenders only. But a closer look at the policies says that even as lenders, the policies of the MFIs are not designed to create an impact, and commercial considerations prevail over the needs of borrowers. So again, it is trying to say that it has some limitations. Even as lenders, they have some limitations. They are not up to mark. First of all, the selection criteria for clients is the existence of an enterprise for at least a year. So there is some issue in the selection criteria itself, because the enterprise has to be working for at least a year. Only then it can be considered for lending purposes. Those who have already invested and survived for a year get credit. Most often clients use the credit as working capital. Not that working capital is not required, but since investment is not enhanced, productive capacity is not enhanced. Hence, there cannot be transformative change. So this particular paragraph here tells us about what kind of limitations microfinance has. Furthermore, it says that this policy leaves out the very poor. Further, this approach limits the number of eligible borrowers. All MFIs target these comparatively fewer numbers of eligible borrowers only. This in turn leads to client poaching and multiple borrowings. Moreover, unlike a good lender, the MFI appraisal process does not have a provision for assessing enterprise needs. So it does not even lends according to the needs of the enterprise. The present repayment capacity and not the projected income generation of the activity being financed are assessed. Since enterprise need is not the focus, MFI offer only one type of product. The catalog of MFIs may have a few more products, but all clients are given a similar amount with similar repayment period and similar installment amount. So it is not as per the requirement of the enterprises. It is rather just one fixed kind of a thing that is applicable for all the enterprises. This could be cost effective for the MFI, but clearly the financial needs of the micro enterprise are ignored. Different enterprises may have different needs, of course. Further, the loan amount is too small to create an enduring asset. So again, whatever lending happens, that amount is also too small, so the loan amount is too small to create an enduring asset. Barring a few low income generating activities such as home based tailoring, no other investment can be done. Incidentally, this amount is not sufficient even as working capital to cater to a running or growing enterprise. MFI fill the void of formal lenders for a population with a constant cash crunch and as such are welcome, but their lending policies are aimed at consumption smoothing and nothing more. So this whole paragraph basically talks about the limitations of microfinance. Consider the following statements about the policies related to microfinance. The loan amount that it offers is subnormal. The products offered are limited. This is very clearly mentioned over here about the product. This particular paragraph talks that offer only one type of product. So the products offered are limited is obviously the correct answer. And if we look at statement 1, it says the loan amount that it offers is subnormal. Well, this is also a correct statement because where did it talk about loans? Here it is, we have already marked it. The loan amount is too small to create an enduring asset. So definitely statement 1 is also correct that the loan amount is subnormal. It is not up to the limit, up to what it should be. So therefore both the statements are correct. The answer should be option C. The second question here says the appraisal process of MFIs focuses on the future projected incomes of the enterprises being financed. The appraisal process is discussed here. It says unlike a good lender, the MFI's appraisal process does not have a provision for assessing enterprise need, the present repayment capacity, and not the projected income generation of the activity being financed are assessed. So basically it says that the present repayment capacity is the only thing that is being assessed, and the projected income generation is not. So let's see, the statement said the appraisal process of MFIs focuses on the future projected incomes of the enterprises being financed. Well, as per the line that we just read, the present repayment capacity is the focus and not the future income generation. Therefore, this is an incorrect statement because it says that future projected income is the focus. So this is incorrect. Making transformative changes with respect to poverty is not the primary goal of the MFIs. Well, making transformative changes is not at all the goal of MFIs. Leave primary or secondary. It is not at all the goal of MFIs. Therefore, this is also an incorrect statement. So both the statements are incorrect. The question says which of the statements are correct. So neither one nor two. Answer is D. Consider the following statements. MFIs select its clients on the basis of the duration of their existence in the market. Yes, we just discussed while giving you the overview of the passage that here it is. Those who have already invested and survive for a year get credit. The selection criteria is the existence of an enterprise for at least a year. Therefore, definitely this is a correct statement because it selects its clients on the basis of the duration their existence in the market. Investment capacity is indirectly related to productive capacity. Let us see. This comes from here. Not that the working capital is not required, but since investment is not enhanced, productive capacity is not enhanced. Therefore, investment capacity and productive capacity has to be directly related, directly proportional. If investment is not enhanced, productive capacity is also not enhanced. But here it says that it is indirectly related to productive capacity, which is incorrect. It is directly related. Therefore, the answer will be option A. What is the central idea of the passage? Well, this thing we have already discussed, that the central idea of the passage is to discuss the limitations and the problems in the MFIs, in the lending policies of the MFIs. Let's see which choice explains that. The level of credits available to the poorer sections of society. Not at all. The need of lending sustainable credits to the poor. No. To emphasize the needs of borrowers over commercial benefits of lenders. No. None of these statements expresses the central idea of the passage, that is the limitations in the policies of the MFIs. Therefore, the answer will be none of these, option D.